So, good morning, good afternoon, good evening, traders, wherever you are in the world. Victorfx here with another brand new video, consistent video. Okay, I might not be consistent, but keep a listen. And in today's video, we're going to be looking at beginner traders and a lot of issues or hurdles you have to cross while you're starting out trading so you don't get confused along the way. I mean, it's okay to be confused along the way. So far, at the end of the day, you become profitable. All the stress is going to pay out. Okay, believe me on that. So, in today's video, I've listed out a bunch of things that are really relevant to beginner traders. For example, the first one here is trading tools or indicator. Hopefully, as a supply and demand smart money trader, you are not looking at indicators because indicators are actually not that useful, except it's MT5 indicator where maybe you're looking at custom stress spreads and so on. Else, if you're looking at a normal trading view indicator, it's really of no use, to be honest. So we can even strike that out if we wanted to. Trading indicator, we don't want to use that. Okay, now another thing I see traders confused about is time frame. For example, if you're looking at a 4-hour time frame, putting in high low high low high low and a high, breaking structure to the upside. Okay, now clearly on any strategy in the world, okay, you'll be looking for a way to buy from this zone if it comes down to this zone. Okay, if it does, because sometimes it might just take off and break once more and you don't get a trade. But if it comes down to this zone, a lot of traders are going to be looking to buy it from here. Now, where the beginner traders get it wrong is they start looking at zones between the high and the low. Okay, they see price doing all this and they're like, oh, what's going on? What is going on with this trade? And then they see it break, and in this zone they are trying to maybe sell it. Maybe they've taken two wins, or maybe taking like 4 losses on the way down, 100 losses, and they miss this entire move to the upside. I'm not saying you have to catch every single move, but you have to know the most probable moves. Okay, based on your own strategy, the most probable moves are what we are trying to catch. We're not trying to catch every single trade in between all these zones. I mean, if you are a pro and you've learned how to do this with a given step-by-step guide, you'll be able to what, catch trades, nice trades, confirm them, write them down, and then what, even say catch trades from this zone, ride it up, and then break this structure, and even hold partials to even continue forever if that trade is, if the market is extremely bullish. So time frames should not get you confused. Time frames are just, if you're looking at a 1 minute and you're seeing an uptrend, that is your major time frame, and then you should be looking for confirmations on lower time frame like 5 seconds and so on. Okay, for high RR or so and so on. So you should not try to counter trend if you are not a professional and you don't know how to do it. Don't try counter trending or trading in intermediary market. Intermediary market is this market before tapping of the main zone of your higher time frame. Okay, so that is in the intermediary time frame, and you should not try trading it. And if you want to try trading and you see it failing a lot, you just know you have to develop more skills in order to be able to trade that kind of market. Okay, fair enough. So time frame, which time frame to use? You have to use a lot of time frames. For example, if this was a 4-hour chart, you would know that, okay, you have to confirm this on a lower time frame, maybe 15 minutes. You see lower trend and know if it's gonna reverse to become what, bullish, and then continue to run this high. Okay, so that's basic thing you need to know about time frames. Okay, so now supply and demand. A lot of traders are like, which supply and demand am I going to trade? Which candles are valid? Which zones can I trade? Now you have to have a narrative. For example, you have a high. Let me use a downtrend because I've used uptrend too much. You have a clear pushing downtrend and you have a zone like this, and in between this zone you are seeing 10,000 supply zones. If you know what supply and demand is, you are maybe seeing the supply zone over here, you are seeing the supply zone over here, you are seeing the supply zone over here. Now in some perspective, all these zones are valid for price to what, drop off from, and you just know that your invalidation comes once price hits this high and then what, breaks it and closes above it. Okay, sorry for all the messy drawing. This ink is not the best. So once price invalidates this high, breaks above it, then okay, we got a break of structure, we should expect a reversal. Else, the most probable move for this down market is not for price to just break it all of a sudden and start aggressively going against it. Okay, that is not the most probable move in the market. So you should understand what the most probable move is. So at the end of the day, if you had 3 zones to sell from, what I'll advise you to do as a beginner is wait for this highest pullback right here. Wait for this right here, because it's going to be more probable if price does tap into it. This a lot of times it's going to run away from you, but you have to keep taking setups and setups. But if price does tap into this zone right here, you do what? You look for your lower time frame confirmation, which might be a break of structure this way, and then you look for an entry or a full entry here to go what? Short, to break this low. So if price does touch me to there, you just take your trade. Else, if you try to take all these intermediary trades, which are gonna work out sometimes, okay, you're gonna discover that okay, a lot of the times you are getting stopped out, you are getting more zones liquidated and stuff like that. You are getting more zones inconfirmed, and you don't have to be part of it. But if you have a valid confirmation strategy that allows you to confirm each zone before you enter into the trade, you're gonna be able to resolve those kind of issues. Okay. So supply and demand can hold the nearest supply and demand zone should be the immediate one here. You try to confirm it, and if that fails, this will be the final zone. And then if this fails, you know, okay, we're out of the bearish trend. Now sometimes it might just go above here and close below with the idea of wicks. I'm not here to teach in-depth strategy, so a break of structure, a candle has to close above this zone, okay, and price needs to spend some time above here before you confirm that as a break of structure. Okay, now a lot of traders, you can look at the next option, entry, how to get an entry, and if you're entering too early or you're entering too late. Okay, you have to be patient if you want to be a trader. For example, as I draw out this supply zone here, sorry I'm not using live market conditions, we're gonna do that a lot, so no shit, we'll catch trades. Okay, so this zone right here, if you want to confirm it, you have to be on a lower time frame looking at this market structure, and you have to have a good entry, similar entry on all of your trades. Okay, you have to have a very similar entry on what your trade. Your trade entries should be similar. You shouldn't always be changing entries. Your entry shouldn't be out of one weird thing. Like, have a very well defined entry, which I'm going to be doing in my mentorship when I have it. For now, we have a free Telegram channel. Check it, link in the description. You should know exactly what your entry criteria demands and how to enter. That's how to create consistency, because if you're always entering off of random confirmations, random supply and demand zones, supply and demand zones are going to fail more often. And if you don't know how to do that, I mean, a lot of traders do it that way. I don't. I confirm every single zone to the second time, even to the 1 second time frame. So if you're not able to do this in a very regular way, how are you expecting to be profitable? And if some traders are just gonna see something like this, next thing they place a buy order and then price dips below it, they're like, oh my god. The most probable move for this market is to go lower and lower and lower in any random form. Okay, so you're not the one telling the market what to do. You just have to be able to confirm that, oh, we are bullish now, we are bullish now. Go on lower time frames and see yes, we are bullish now, and it's still less probable because this trend is what? A down trend. So you can see in this place, you can see get bullish place for professionals. Don't do it as a beginner trader. Wait for the most probable zones, probably 4 hour, 8 hour, whatever. Wait for price to come back into those zones, and then what? Trade based on that using a nice proper entry criteria for enter your trades. Okay, now the next thing is a lot of traders look at risk to reward, especially in smart money. Okay, I've seen a lot of this. You catch 10 winning trades and 1 losing trade wipes off your profits. How? Management. Okay, so risk to reward doesn't have to be 1-to-1, and a lot of traders think they are placing 1 to 10 risk to reward, but they get a trade that's playing out like this. They get a trade from here, and then before the trade even runs a little bit of zone, they're already taking partial, first partial. It moves up, it breaks here, another partial. It moves up, it comes down to this zone, another partial. Before it goes, I've done this, so I mean, I understand. It goes down, another partial. What you've successfully done in this, from trading up here to down here, is catching a 1 to maybe 2 or a 1-to-1. And if you know smart money, you know that most smart money strategy, at least mine, doesn't have that high of a win rate. Maybe let's say 50%, 30% win rates. I'm okay with even a 20% win rate with the risk to reward they're targeting. So you take too many partials. You should have a trading plan that tells you, okay, we partial here after it breaks this low or at this particular risk to reward, you don't just go ahead and say, oh, profit partial, profit partial. We go up, oh, we are back in profits. Actually, I partial before, I partial again. We'll go down once more, partial. Yes, partial. One more time, partial. And you can see, fucking up your trading. You're not making any money by doing this. You're just losing money in the long run, because when the losers come, that your one-to-one is not gonna be sustained. It's not gonna be there for you. Okay. I've talked so much. Whew. So now, risk reward has been tackled. Now, too early taking too many partials. Okay, I just say that without even looking at this place. Nice. Now, spreads and slippage anger. This one is very, very, very common among smart money traders using 1 pip stop losses. Now, I also use 1 pip stop loss, stop losses most of the time. But in this context, I'm talking about once you're using the 1 pip stop loss and you know your stop loss is above a high here. If your spread is 2 pips, you have to account for that 1-2 pips on your main stop loss on your brokerage, okay, to be able to take charge of this trade that's gonna play down here. If it does, and if it does genuinely take you out, you should be always ready to take a loss. That's what I say. Okay, so sometimes you might still use the right slippage and not slippage, the right pip stop loss and still get stopped out. You should be ready for that. It should be part of your trading plan and so on and so forth. Okay, so the spreads and slippage. If you're a new trader, you might not know what spreads are, but you should know, because it's something related to your broker. When you do get a live account, you should know that, okay, I'm going to be dealing with their own spread and not the market is just gonna be, once it hits my stop loss, it hits my stop loss. And the spread normally matters on a sell position. So when you are trying to predict the down movement of the market, the spread is much more useful as compared to a buy position. A buy position, if your stop loss is here, it doesn't get validated. I'm gonna make a separate video on that. Now, slippage, price actually does not execute where you want it to execute, or once you hit stop loss, it goes more than the stop loss you set, and you take a higher loss compared to the normal loss you're supposed to take. Maybe you were risking $1 on a trade, and then at the end of the day you are losing $2 due to slippage. Some brokers actually are better off with slippage as compared to others, prop firms and whatnot. So you should be very, very picky when you're trying to select the broker they are trying to use for trading. Okay, so that being said, those are the basic things I see beginners stuck in. Okay, so if you want to get out of this stage, it's going to take a lot of back testing. So don't just, I would say, even if you see profitability in 1 week or 2 weeks, just don't open a live account at the moment. Okay, use FTMO has a trial account. Go to FTMO, just create a new client area, just click on it, put your email, get a trial account, and then what, trade that trial account, pass like 15 trial, okay, 5 trial accounts at least with your strategy. Get that confidence. So when you actually placing your money to put into to apply for a prop firm, or you're trading your own personal funds, you won't have that FOMO and you won't have that fear of losing money. You will know that your strategy is followed to the T. Okay, so that's one of the advice. Another advice is, you are a trader, you are not getting paid for trading. Okay, what I mean is, you're not getting paid per day for trading. It's based on your profit. So it's not about how long you spend on the charts. Oh, I've been on the chart for 14 hours, I'm grinding hard. It's not about all that. I can catch a trade on Monday, get partials, get my first partial, which is like, let's say 10 pips. 10 pips first partial, it's like a 1 to 10. Take my second partial that same day, maybe 1 to 20, and I'm still letting the trade run throughout the whole week, and the trade might achieve a 1 to 200 in that week. And then what, I just rest off, as compared to, okay, I'm on the charts every single day, I'm grinding hard, I'm taking these trade setups, and at the end of the day I end in a losing week. So it's not about how long, or nobody's like, we're not getting forced to trade. It's like something of free will. So I don't see why some people are just, okay, I'm going to jump into this setup, I'm going to jump into this setup, oh, this setup, and it doesn't, most of the time it's not going to meet your trading plan. So if you're actually trading your trading plan to the T, I mean, every single setup is gonna be a setup you're gonna be like, okay, when you come out and somebody say explain setup to me, you're gonna be like, okay, according to this particular supply and demand textbook, this is how it's supposed to. So it has to be step by step, step by step, step by step, step by step. I know I've ranted for too long. Love you guys, and this will be the end of this video. Leave a like and subscribe. I don't really have much subscribers. I would love to hear from a lot of people and elevate a lot of people together. So thanks again for watching this video, and this